So hello, what's up? How is everyone doing? Welcome to another revision session where we are going to revise SA 550. So talking about SA 500 series, we have already completed the revision of SA 500, 501, 505, 510 and I think 540 also. So now we are going to start with the revision of SA 550. So in this revision, we are going to revise all the concepts along with the questions of ICA study material past exam RTP and MTP. Sir, how can we download these board notes that you are teaching from? So these board notes you can download from our Telegram channel. Telegram channel Clear CA with Shubham Keswani. Link is in the description. So without much ado, let's begin with this revision. Make sure as a good CA student you are liking this video so that it can reach out to more CA students who want such English revision videos. Okay. If you are new to the channel, do click the subscribe button. So talking about SA 550 related party, as the name suggests, 5 and 5 are related. So you call it related parties. Now the question comes, sir, why do we need to study this essay? As an auditor, what do we need to know about the related parties? So Baba, you want to obtain a reasonable assurance that financial statements are prepared in all material respects as per applicable FRF? Yes, sir. So talking about the applicable FRF, that is Ind AS 24 or AS 20, they require proper disclosure. They require financial statement disclosure of related party relationships, transactions and balances. Because applicable FRF requires this related party relationship, transaction and balances to be disclosed, it is our duty as an auditor to see whether they are disclosed properly, whether they are accounted properly. So that's why this standard is very important. So first thing first, what is the auditor's objective? This you just need to understand, that we need to understand the related party relationships and transaction, which I call as RPRT, so that we can recognize fraud risk factors. So fraud risk factor is a concept that we study in SA 240, which says that if there are transactions with related parties which are not at arm's length price, which are outside normal course of business, or the related party has a dominant influence, then this is a fraud risk factor. Second thing, you need to see that the RPRTs are properly disclosed in the financial statement, so that you can see that the financial statement give a true and fair presentation if you are using fair presentation framework, or to make sure that they are not misleading if you are using a compliance framework. And ultimately, we need sufficient and appropriate evidence about that the related party relationships and transactions are properly identified, after identification accounted, and lastly disclosed as per applicable FRF. So remember these three keywords: IAD. RPRTs are IAD. IAD means identified, after identified accounted, after accounted disclosed as per the applicable FRF. Now what is the applicable FRF? I just told you, AS 18 or Ind AS 24. Now the question comes, who is a related party? So if it is defined in applicable FRF, use that definition. If FRF does not contain any discussion, then there can be three types of related party as per this standard. First related party is the person who controls you. Second related party is the person or entity whom you control or you have significant influence. And the third type of related party is the one which is there in your common control, which is there in the common control. So the first related party are the persons or other entity that has control or significant influence over the reporting entity or client, that is your parent company. Second is another entity over which reporting entity has control or significant influence, like the subsidiary, associate or any joint venture. And the third related party is under common control. So let's say there is a parent company called BB Limited. Yes, people. BB Limited has 51% share of SK Limited and 51% share of AK Limited. Can I say BB Limited is controlling SK Limited? Yes. Can I say BB Limited is also controlling AK Limited? Yes. So because these two entities are in common control, they are related parties. They are related parties. So this is what you need to understand. But sir, how can this common control be developed? Either there is a common ownership, or the owners are close family members, or there is a common key management. Common key management means it can be that SK Limited CEO and AK Limited CEO, they both are same person. So if they are managed by the same person, then again there is a common control. Clear? Clear, sir. But sir, In this case of common control, there is an exception. What is the exception? Let's understand that. If the entities are under common control by a state means any national government, state government, or local government, then they are not considered related unless they engage in significant transaction or they share significant resources with each other. So for example, central government is controlling Adani Limited and central government is controlling Ambani Limited. Can I say they are in common control? Yes. But sir, they are not related party. They are not related party unless they engage in significant transaction with each other or they share significant resources with each other. Then only they will be considered to be related. Now sir, on this exception, we have an something that is shared in Ind AS 24. On this concept, there is something in Ind AS 24. What is there in Ind AS 24? Ind AS 24 says, if you are in common control with another entity, ठीक है? If you are in common control with another entity because you are commonly controlled by a government, then you need to disclose some things. What are the things to be disclosed? You need to disclose the name of the government, which is the government that is controlling both the parties. Second thing you need to disclose is the relationship with the reporting entity, that government has control, significant influence, or joint control. Okay, sir. Last thing that you need to disclose is if Ambani Limited is having any significant transaction. Ambani Limited is having any significant transaction with Adani Limited, that significant transaction also need to be disclosed. So nature and amount of significant transaction individually or collectively with the other party that is in common control, that needs to be disclosed. Do you want to do a question on this concept? Yes, sir. So recently a question has been asked by ICI in the MTP. Let's do this question. Sir, where will we find this question? This question may not be there in your question bank. Okay, so no need to worry about it. Just give me a moment. Da, 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 da. This question might not be there in your question bank, but it is of MTP September 25. So all you need to go again is the Telegram channel. I have shared the question bank edition file. So that edition file you can refer. You will find the recent RTP MTP questions there. Let's do question number 6. So what is happening in this question number 6? Let's understand with an example of this image. Our client name is ECL. They have a turnover of 10,000 crore. Okay, sir. And they are controlled by Government of India. Similarly, Government of India is also controlling another entity, that is PCDC Limited. Now, sir, can I say since Government of India is controlling our client and PCDC, these two entities are under common control? Yes. Now, your client purchased a material of 700 crore from PCDC Limited. Can I say this is a significant transaction? This is a significant transaction from entity under common control. Yes. Should it be disclosed under Ind AS 24? Yes, it should be disclosed. See what it says. Management of the entity says no disclosure is necessary for such transaction. Analyze this issue while finalizing the report. So what do you think? Disclosure should be there or not? Sir, disclosure should be there. So how to frame the answer? First of all, start your answer with Ind AS 24. That your client means reporting entity, is exempt from the disclosure of related party transaction and balances with any government. That means if you are having any related party transaction or any related party balance with the government, that doesn't have to be disclosed. Similarly, if you are having any transaction or balance with the entity under common control, that doesn't need to be disclosed. So these two things you write. But sir, if you are applying the above exemption, two things need to be disclosed: name of the government, relationship with the entity, whether it is controlling, joint controlling, or significant influence. And second thing, if you are having any significant transaction with the entity under common control, that significant transaction needs to be disclosed. It can be individually or collectively significant transaction. After this, just give a reference of SA 550. SA 550 says whatever are the related party relationships and transactions, they should be properly identified, accounted, disclosed as per applicable FRF. Write the facts of the case in one or two lines and conclude that management's contention is not acceptable. Management's contention is not tenable. Got it? Got it, sir. Now again, coming back to the concepts, talking about the book, we have covered the objective, we have covered the definition, we have covered the exception and Ind AS 24 disclosure. Now talking about the requirements of this essay, you can just give it a read. First topic of today's revision, first important topic, sorry, first important topic of today's revision is engagement team discussion. Get ready. Yes, everyone. So let's talk about the topic of engagement team discussion. So this is the brief structure of this standard. This is what we drew in the class. First of all, engagement team will discuss, then they will perform their procedure, risk assessment procedure, responding to the risk and other matters. So first of all, let's cover engagement team discussion. Acha, what will the engagement team discuss about? Sir, that needs to be disclosed in financial statement. What needs to be disclosed in financial statement? Related party relationships, transactions and balances. So first thing that they will discuss is nature and extent of related party relationships and transaction. Acha, tell me, where will you find these related party relationships and transaction? In some records and documents. So second thing they will discuss is records and documents that may indicate related party relationships and transactions. Okay, sir. Now, when I am going through these records and documents, should I sleep or I should stay alert? Sir, you should stay alert. So second thing is maintain professional skepticism throughout audit. Why we need to maintain professional skepticism? Because there can be circumstances indicating related party relationships and transaction not disclosed to the auditor. Now tell me, if there are some RPRTs not disclosed to auditor, it brings into question entities internal control. It brings into question entities internal control. So last thing that you discuss is importance attached to internal controls for those three magical words: identification, accounting and disclosure of related party relationships and transaction. So these are the 5 points you need to cover. Once again, let's revise, revision in revision. They will discuss the nature and extent of RPRTs. Where to find them? Records and documents. Stay alert. Maintain professional skepticism throughout audit. Why? For circumstances indicating RPRT is not disclosed to auditor. What does this indicate? Importance attached to internal control for identification, accounting and disclosure of RPRTs. Clear, boss? Clear, sir. Acha, let me tell you, do this revision very properly with me. Understand the things properly. Do the questions properly. At the end, I have a surprise for you. Okay, that you will enjoy. Within 5 minutes, we will revise the whole standard. But for that, everything should be crystal clear to you. Got it? Got it, sir. Now let's do a question on this concept. Come to your question bank and then there we have question number 1. Quickly revising this question, see what it says. There is an audit team which has 3 members, which has 3 types of members: CAZ, engagement partner; CAQ, paid assistant; 3 article assistant. They have observed that there is a huge amount of subcontract payment made to JB Associate, a partnership firm in which the director of JKL Limited is managing partner. Understand now what is happening? 2 entities are there: JKL Limited and JB Associates. Okay, sir. There is one person who is director in JKL Limited, and the same person is managing partner in JB Associate. Can I say there is a common control? Yes. So when there is a common control, these two are related parties. These two are related party. So engagement team discussed that as per SA 315-240, we should specifically consider the chances that the financial statements can have material misstatement due to fraud or error resulting from related party relationships and transaction. So highlight the matters to be discussed by CAZ with engagement team with reference to relevant standard. So what is the standard of related party? SA 550. Which topic ICI is asking? ICI is asking about engagement team discussion. Come on. Engagement team discussion. So the 5 points of engagement team discussion, let's identify. First point: nature and extent of related party relationships and transaction. Second point, what was the second point, everyone? Where will we find them? Sir, here. Records and documents that indicate existence of related party relationships and transaction. Where is the third point? Be alert. Sir, this is the third point. Maintain professional skepticism throughout audit. Why? Fourth point. because there can be circumstances or condition that indicate related party relationships transaction not disclosed by management to auditor. Now comes the last point, that this indicates the importance management and TCWJ attached to internal control for identification, accounting and disclosure of RPRTs. Okay, so don't get confused by this flow. The flow in which we covered this topic, this is how you need to cover it properly. Is the topic number 1 clear? Yes sir. Now let's cover the risk assessment procedures from the book. So talking about the risk assessment procedure, what is a risk assessment procedure all about? Here you take understanding of the related party relationships and transaction, and through that understanding, you identify and assess the risk of material misstatement. Sir, how will I be able to understand the related parties, relations and transaction? By inquiring, by asking the management. So the first thing is you need to do is inquire the management about the identity of related parties, including the changes from prior period. Then see the relation with those parties, and after the relation, see the transaction with these parties. In the transaction, see the type and purpose of the transaction. Okay, sir. Once you have done this time pass, the major focus is accounts and law. Accounts and law, sir. Accounts and law means as per accounts, related party transactions are properly accounted and disclosed. As per law, these transactions are properly authorized. We have studied in section 177 and 188 that related party transaction needs to be authorized by audit committee under 177, board and shareholder approval under 188. So these two things you need to check, that there are proper internal controls in the entity that identify, account and disclose the related party relationships and transaction. That is the accounting part. Talking about the law part, authorization and approval of related party transactions and relationships. What is another transaction similar to related party transactions? So the transactions which are outside normal course of business, which are not at arm's length price. So second thing you need to ensure is authorization and approval of transactions outside normal course of business. So this topic, all you need to do is just take a quick read. Understanding point of view, it is important because it was there in your CA Inter. Now sir, one more topic of your CA Inter, which is not there in your CA final study material, but I still feel from safety point of view, 5-6 points you should cover. Okay. It says there are certain records and documents through which you can get to know about related party. So I told you whenever you are going through the records and documents, you should stay alert, exercise professional skepticism. But what are these records and documents? So it can be a bank confirmation, legal confirmation, third party confirmation. You can go through the minutes of the meetings of any shareholder, TCWG, so that you get to know who is the one who is actually maintain the control, who are the key managerial persons, because they are also regarded as related party. There are some other records and documents also. We learned 6 points in the class through pairing. Let's use that pairing. You can refer the income tax returns to know the associate enterprise you study na in international taxation. Okay, sir. Or other related parties. You can go through the internal audit reports to know about the internal controls relating to related party. Who are the related parties, sir? Those who control us, that means our shareholders. So check the shareholder register. The parties whom we control, that is our investment. So check the record of investments. And other related parties are key managerial person. So you can check the agreements with the management and TCWG, and conflicts of interest statements given by management and TCWG. So these are 3 pairs you can create. Name starting with IN. IN means income tax return, internal audit report. Shares wale point, what are the share point? Shareholder register and record of investments. And lastly, management and TCWG 2 points. Conflict of interest with management and TCWG, and contracts and agreements. Sorry, statement of conflict of interest from management and TCWG, and contracts and agreements with management and TCWG. So any 6 points you can cover here properly. Take 2 sips of water, and then we are moving to the most important part of this standard, that is the special cases. Now, sir, once you have assessed the risk, once you have understood about the related party, now you need to do your testing. Now you need to do your procedures. So once you are doing your testing procedure, there are two special cases to be considered. Let's focus first on case number 1. What does case number 1 says? Identification of unidentified or undisclosed related party or related party transaction. Tell me one thing. You are doing your audit? Yes, sir. While going through some records and documents, you identify a related party that has not been disclosed by the management. What will you do? Sir, I will go to my engagement team. I will go to my engagement team and tell them, I have found a related party. I have found a related party. So getting excited, you will promptly tell about this to your engagement team members. Got it, sir? Second thing, what will the engagement team do? They will call the management. Management, come here. We have found a related party. Go and identify all the transaction with this related party. Second thing, tell us one thing. Why your internal controls fail to identify the related party? And then you will realize something. Sir, what we will realize? We have increased our work. When the management will bring new related party transaction, you will have to test them. So you will have to perform substantive procedures on the newly identified transaction. Yes, sir. And after all this, start thinking. Did management intentionally hide these related party? Is there some risk of material misstatement, including fraud, that they are trying to hide? Start overthinking like that. So these are the points also given in the standard. The more you learn with fun, the more you take the feel of the topic, the more it gets in your mind. So first point says, get excited. Whenever you identify a new related party, promptly communicate to other engagement team member. Then call the management. If the FRF has related party requirement, request the management to identify all transaction with the new related party. Then inquire them why the internal control failed to identify or disclose the related party transaction. Now, sir, when management will bring these transaction, you will have to perform substantive procedure on the new transaction. And then you will do the overthinking. You will start reconsidering the risk that there can be other related party or related party transaction that management has not disclosed. And if it appears to be intentional, that means there is a fraud risk. Evaluate the audit implication. You need to evaluate the audit implication. Clear, boss? Clear, sir. So on the same topic, we have a question in your question bank. Question number 2. It is a direct question. Read the last line. Highlight the aspects that auditor shall consider in identification of previously undisclosed related party transaction with reference to relevant standard on auditing. So ignore this whole question. This everything I say just give to waste your time. Okay? So always start with reading the last line, because sometimes reading the last line you get to know it is a direct question. So the concept that I just discussed with you, that is the answer you need to write here. Do you want to mark the points? Yes, sir. First point. First point was getting excited. So timely communicate to all the engagement team members. First point done. Second point, inquire from the management. What was the inquiry wala point? Request the management to identify the transaction with the new related party. Then inquire why entity failed to identify this related party. Start with the, then sir, with for these new transaction, you need to perform substantive procedure. So this is your fourth point. Carry out substantive procedure on the newly identified related party transactions. And then talk about the fifth point. Reassess the risk with the related party. Okay? And the last point says, if you feel it is intentional, that they intentionally did not disclose, evaluate the audit implications. Okay, so ICI has a habit of confusing the student with this type of answer, but if you follow proper flow, things get properly clear to you. Right, sir. Awesome. Now take 2 sips of water. Now let's move to the next topic. Let's take an example. In our class, we have a good boy called Pawan. Okay? Pawan has a company called Pawan Textiles Private Limited. Now, sir, what has Pawan done? In Punjab, he has a warehouse. That warehouse he has given on rent to one of his friends, Pavni. Now, sir, as an auditor, I get to know that for this warehouse given on rent to Pavni, the rent that he is getting is zero. He is getting zero rent for it. Now, I asked Pawan, Pawan, why are you giving the Pavni warehouse rent free of cost? Why are you giving it free? Why she is not giving anything to you? So Pawan tells me ki, listen auditor, I have a contract with her. I have a contract with her that if I give the warehouse on rent, she will give me raw material. She will give me raw material at concessional price. So then what I will do, I will inspect the contract. Whenever I see such type of transaction which is not in normal course of business, which is outside normal course of business, because there is zero rent. So whenever I see such transaction outside normal course of business, I will inspect the contract. कि whether there is a business rational, ठीक है, if he is getting the raw material at concessional price, there is a business rational. Then whatever terms he is telling me are the same terms and conditions mentioned in the contract. Okay, sir. Apart from this, if it is a related party transaction, two things should be there: accounts and law. Account says that it should be properly accounted and disclosed. Law says that it should be properly authorized. It should be approved and authorized. So this is what is written here. Whenever you find any significant transaction outside normal course of business, ask him to give you the contract. For such transaction, you should take the contract. Say with me, contract. Two things to see in contract: there should be a business rationale of the transaction. That means it should be logical. Terms of the transaction should be consistent with management explanation. So whatever Pawan tells me, same thing should be mentioned in the contract. Basic things: accounting and law. Account says that it should be properly accounted and disclosed as per applicable FRF. Law says that it should be authorized and approved. Easy, easy, sir. Sir, if there is no business rationale, then there can be fraud risk factor. If there is no logic to this transaction, then it can be a fraud risk factor. So understand that as a auditor. Let's do one question of ICA study material. In your question bank, it is question number 4. Let's understand with an example. So there are two entities which is our entity. We are the auditor of My Living Private Limited. Okay. So you are the auditor of this entity. Okay. My Living Private Limited. Now understand. There are two entities. Living Well Private Limited. What does it do? It manufactures floor covers. Floor covers, I hope you understand, carpets, using labor intensive business. There is another entity called My Living Private Limited. They manufacture blankets using machinery. It is a machinery intensive business. Now, sir, both of these entities have common director. So can I say there is a common key management? Can I say they are related parties? Yes, sir. Now what is happening? This entity sold a machinery at market price to this entity. So when the things are at market price, can I say it is in normal course of business? The answer is no. You need to understand whether there is any business rationale of the transaction. So logically tell me, if this entity is a labor intensive entity, does it even need a machinery? No, sir, it does not need machinery. So if a machinery is sold from this entity to this entity, can I say there is no business rationale? Can I say they must be trying to do something hanky panky? Yes. So it is a fraud risk factor. So what you will write in this answer? Come to your question bank. I'll tell you what is to be written, how you need to frame this answer. So if you see, whenever you see a significant related party transaction outside normal course of business, I told you to inspect the contract. In the contract, see the business rationale and the term should be consistent with the management explanation. Same things you need to write here. Why do you need to see the business rationale? To see whether there is any fraud. Fraud means fraudulent financial reporting or misappropriation of assets that you study in essay 240. If you understand the business rationale, you get to know about the reality of the transaction, whether that transaction was actually required or not. Then write the facts of the case. And lastly, in this current case, write there was no business rationale, so there is a fraud risk factor. Now see one thing, ICA has written the answer less. Theory part of ICA is less. They have not written about the terms and condition. They have not written about the accounting and disclosure. They have not written about the authorization. So on safety part, I feel whatever theory I have told you, this part, logically, this should be written in your answer. Gotcha, sir. So with this, I think this standard is almost complete. Acha, one more thing, I told you, if there is a domination of the management by a single person or small group of person, and when there are no proper internal control, it is a fraud risk factor. This topic we have already covered, identification of a new related party or transaction, or identification of related party transaction outside normal course of business. Both the topics are done. Three more topics, let's just read them from MCQ point of view. We should take written representation that all the related parties and related party transactions, they are disclosed to two people, to the auditor and in the financial statements. Second thing, communicate with TCWG. Acha, with TCWG, what type of matters we communicate? Normal matter or significant matters? Significant matters. So all the significant matters in connection with related party should be told to TCWG as per SA 260. And lastly, what do we need to document as an auditor? Name of the related party and the transactions with the related party. So from MCQ point of view, this thing should be there in your mind. Sir, is the standard complete? Yes, the standard is complete, but few questions are pending. I think one major question is pending, and after the question I will give you the surprise. Sir, which question is pending? So there is a big question in your question bank, question number 3. This was asked in MTP November 20 and model test paper of ICAI. Let's do this question. Take 2 sips of water. See, what does this question say? Read the last line, requirement of question. Advise the items to be reported to TCWG. So which standard talks about communication with TCWG or reporting to TCWG? SA 260. So first of all, you will quote SA 260. Okay? They have also done this in their answer. Where is the SA 260? Yeah. Communicate the items to TCWG as per SA 260, communication with TCWG. Now, sir, what are the matters? Let's read the question. So in this question says, as an auditor, you have brought following additional matters to the attention of engagement partner. First point, there is a long-term borrowing from a parent company. There are no return terms. Neither the interest nor the principal has been repaid. Can I say parent company is a related party? Yes, sir. So this is a related party transaction. Second point, computers were received from parent company free of cost. Amount is 23,000. No accounting is there. No disclosure is there in the accounts. Can I say it needs to be accounted and disclosed in the financial statement? Yes, sir. Because again, it is a related party transaction. It should be disclosed. Remember, the amount does not matter. 23,000 amount does not matter. Still, it needs to be accounted and disclosed. Acha, which AS? AS 18 and Ind AS 24 disclosure should be there. Next point. Amount of 3.25 lakhs per month is paid to WeCare Associate, which is a partnership firm, which is a related party. They have already mentioned in the question for some marketing services. Consideration is higher than the arm's length price by 0.25 lakh rupees. So again, it is a related party transaction outside normal course of business. While the transaction is accounted in financial statement, but no disclosure is given as a related party transaction. Should it be disclosed? Yes. Again, as per AS 18 and Ind AS 24. And lastly, it says, audit manager reported that she asked for certain information from about another related party of 47 lakhs from CFO, but he refused. No information was provided. CFO said this information is confidential and cannot be shared with the auditor. Can I say sufficient and appropriate evidence is not provided? Yes. And this is a limitation on scope as per SA 705. So all these elements need to be written in your answer. See how ICAI presents it. Acha, apart from these elements, there is one more area which talks about related party. Sir, what is that area? Caro 2020. So there is a clause 13 para 3 Caro 2020 which says related party transactions, accounting and law. Accounting and law means they should be properly accounted and disclosed as per the accounting standards AS 18 and AS 24. Law means they should be in compliance with section 177, which says audit committee should approve it, 188, which says board resolution and ordinary resolution should be passed of Companies Act. So as per law, it should comply with section 177, 188. Just give me a moment. And as per the accounts, it should be properly disclosed as per the accounting standard AS 18 and Ind AS 24. You got the point or not? Yes, sir. So this is what also needs to be written in your answer. Now see how they start the answer. So first of all, SA 550, whatever significant matters are related to related party, communicate with TCWG. Then write compliance with Ind AS 24 AS 18, the accounting standard. Communicate to TCWG as per SA 260. Now, sir, what are these 3 points? They have taken from the question that the related party transaction of 3.25 lakhs, which was more than the arm's length price, should be disclosed as per Ind AS 24 AS 18 related party disclosure. Refusal by CFO to provide the details is a limitation on scope as per SA 705. Free computers, long-term borrowing without any interest is again a related party transaction that needs disclosure as per Ind AS 24 AS 18. And lastly, you talk about CARO 2020. Lastly, you talk about CARO 2020 that it should be disclosed in the financial statement as per accounting standard and it should comply with section 177 and 188 of Companies Act 2013. So with this, all the questions and all the concepts of related party SA 550 are done. Now, sir, lastly, let's end this revision with a quick one-page revision of SA 550. Are you people ready? Yes, sir. So first of all, talking about the objective. The objective is something you just need to understand, that we need to understand the related party relationships and transactions so that we can recognize fraud risk factor. For example, if there is a related party with dominant influence over the management, then see whether the financial statements are giving a true and fair view if it is a fair presentation framework. They are not misleading if it is a compliance framework. Now, related party definition. Also, this is something to be just understood. Who are the related parties? Sir, the parties above. Above means the entity that controls or has significant influence over the reporting entity. Second, below. I think this is the Hindi wala na, so that you not be able to understand. So write above, below. Below means the reporting entity, it has control or significant influence over the other entity. And the last entities are together. So together means these are the entities under common control. In common control, this is the important part. There is an exception if the common control is by a state. That means any state government, central government, or any other type of government. In such case, you need to disclose as per Ind AS 24 name of the government and the relationship with the government. Either the government has control, joint control, or significant influence. Then, sir, if you have any significant transaction with the entity under common control, now this can be individually significant or collectively significant. It needs to be disclosed. We did a question on this. Then, sir, engagement team discussion. Very simple. You discuss the nature and extent of related party transactions. How to find them? Through the records and documents. Once you are going through these documents, be alert, exercise professional skepticism throughout audit. If you are alert, you can find circumstances that related party relationships and transactions are not disclosed to the auditor. So this tells us about the importance management gives to internal control for identification, accounting, and disclosure of related party relationships and transactions. Lastly, we discussed about the audit procedure. This risk assessment procedure you just need to understand. That's it. Risk assessment procedure is for understanding. First of all, inquire. Who are the related parties? What is the relation with them? What are the transaction with them? Type and purpose of the transaction. Then inquire about the internal controls of accounting and law, accounting and disclosure of RPRTs, authorization of related party transactions and other transactions which are outside normal course of business. Then important questions. Important question 1, important question 2. Important question 1 says, if you identify an unidentified or undisclosed RP, related party or related party transaction, what do? Get excited. Promptly communicate to other engagement team member. Then inquire from the management about other related party transaction and why the internal control failed to identify this related party. Now when the other transactions come, perform substantive audit procedures on the new related party transaction. Then overthink, reconsider the risk. If it is intentional, consider the audit implications. Second point, significant transaction with related party outside normal course of business. Important thing is contract. Say with me, contract. So focus on the contract, see whether there is any logic to it, whether there is any business rationale. Second thing in the contract is terms should be consistent with the management explanation. Then the basics, accounting and law. Accounted and disclosed as per applicable FRF. Authorized and approved as per the law. Lastly, we covered few points from MCQ point of view. Significant matters with related party. Significant matters related to related party should be communicated to TCWG as per SA 260. Document the name and transaction with related party. Take a written representation that the related parties are disclosed in the financial statement and to the auditor. And lastly, we discussed clause 13. Clause 13, para 3, Caro 2020, that all the related party transactions, accounts and law, they should be disclosed as per accounting standard, comply with section 177 and 188. Thank you so much everyone for joining for this revision. I hope you enjoyed it. These board notes you will again find on our Telegram channel, Clear CA with Shubham Keswani. And that's it. Keep studying with this patience, keep studying with this happiness, because when you study with happiness, then only you progress. If you like the video, do give it a like, do share your feedback in the comments. Your appreciation is my motivation. Keep going like this. Soon you will be a chartered accountant. Keep going.